Hello, and welcome to another day of TA the Degen way. Well, it's been a little while since we've done any Bitcoin updates, and if you're a member of our Discord, you would know that according to this chart right here, I mean, I've kind of been on pause since we hit this tick. Excuse me. The time cycles that we run, just how long it takes for a trend to exhaust and why is something that I do go over in some of our videos, and I've talked about extensively in our Discord group. But I mean, this chart here, this is our Trading View Ideas page here, and that Discord group is free, and there is a link in the description. This is from June 15th of 2023. That's over a year ago. We were looking for a pause. This is a weekly bar chart. This week up here, and price has not broke higher since. Probably take a minute to load here. I mean, it's a year old. A lot of bars to load. And my personal bias is to the downside. This is a private chart that I posted in our Discord about a month ago, and where I'm talking about repeatedly how I expect this last week of June we should begin some kind of a directional move. Like I've already said, my personal bias is to the downside. There's a lot of stuff on this chart. If you've been with me for a while, you may understand why I measure some of these things and why they tend to be accurate, at least within the range of reasonability. But it is really dependent on the price action and just kind of what we see moving forward. I look at this kind of like a game of chess. There's a lot of different options, but it's not an endless sea of options, and I tend to just follow the options that appear to be unfolding in front of my face and just trade what I see. So what do we have on this chart? What I want to do today is I want to do a nice in-depth dive into Bitcoin, and we can take a look at time. How did we come up with this time period to stop, and why the last week of June here, there's some different things we can look at there, and momentum, we've got this momentum oscillator down here that's kind of giving us some timing also. You can see I've got this yellow line that's coming up with this kind of dot right here, right where this curve would culminate. Also right where this curve would culminate, you would imagine it would start curving to the downside. We've got this fan here, these speed lines, which is essentially, the same thing as a Gann fan. It's just a little bit more tailored to the actual price action, not just a stock spacing. But it's a repeating ratio between these pullbacks is what makes this fan. And we have our regular fib-based retrace values. And we have these curves. We have our momentum curve. And then I'm book matching this on the other side. Now, I do not expect price to come down here, but, these time cycles do tend to be respected. So, halfway in between, here's this one, here would be the next one. Halfway in between and about a quarter of the way in between seem to be well respected. And personally, I am targeting the $32,000 to $42,000 area, depending on what we see here. So what we can do now is we can just jump right into the chart. So here I've taken this chart and ported it into TradingView, and we're looking at it over here. This is what it looked like a month ago when it was posted. What do I say here? This is a private BTC pullback potential. This was posted in our private but free Discord with the link and invite in the description, targeting the $33,000 to 3,000 target window if the top is in. If the top is not in, I mean, I got a max potential of about 135,000. I mean, that's where I would like to see. I mean, I would prefer price goes up, you know. You have exponential gains to the upside. You have exponential ego when you're right and it goes to the downside. And ego is not worth a pinch of doo-doo. So why this time period? So I mean, there's some things on this chart I just want to point out right here. I've got the square. This is what I refer to as a monthly true range. You know, on a monthly chart or a weekly chart, look at this repeating range size. You know, by the time price moves this far, the fear and the greed meters starts to shift. You know, people who got in, you know, at shorting down here, I mean, they're looking to get out. You know. Or, I mean, like right here, people that got into the long side, when price gets up here, they're looking to get out, and people are not looking to get in. Price has just moved that far. So, I mean, you get this kind of average range that forms. I mean, we can move this box to a lot of places, you know, and find nice correlation. We'd probably move it to, let's go right here once. Yeah. Comes up to our support level, but just so you know what those boxes are, so I mean that's one gauge that we're looking at. Another gauge here is these speed fans, or these speed lines. This Gann fan, this is measuring the rate of change, how much, you know, gain percentage wise versus time. As that rate slows, you know, you get this nice curve in the price action. You know, here you can see this nice curve. Here you can see this kind of curve to the price action. You can see this curve. That rate of change is diminishing over time. So this fan is giving you ticks along that curve. And then you got your fib retrace values. And our momentum oscillator down here, we can see these waves. You can see the curvature of the waves. Where would you expect this curve to culminate? Right about in this area. Look at this right here. You see it building out to the downside, and it's building itself to the upside. Where would you expect it to culminate? Right about here. I mean, look at this right here. This nice shape. You know, this is giving you a range of where you look and follow the price action. These are all different tools that you know, you can use to gauge these things. So let's just go ahead and press the delete button. What can we look at? You know, why have I been stale on crypto for the last 2 months? Well, I measure time cycles. Should be a video on the channel called Fibonacci time or trend time or something. You can search it or join the Discord and ask. Here we have a trend. You know, the amount of time that it took to break trend is about the average amount of time it takes for a trend to exhaust. So, I mean, when should we be expecting this trend to exhaust? Somewhere in about this time range. You know, I mean, it is usually the way that it works. You know, like if we take right here, here's our trend, here's where we broke trend. So how long did it take? And here, let's just run right here, we can just use this right here. How long did it take to break trend? Not bottom, but actually break trend. There we go. You know, here's your sideways, or here's your down, here's your sideways, here's your up. You know, look at the halfway mark in between, well respected. Look at the halfway mark in between, it's respected. 3/4 mark is respected. You know, here's the half, about halfway is about right there, so 3/4 would be right down in here. Here's halfway, very well respected. You know, so I mean, this is, and this changes slightly over time. Usually this is very accurate. for about 3 repetitions, you know, right there. Well, now you got a new trend that you can gauge, and you know, here's 1, 2, 3. So I mean, this is in, you know, about the average amount of time that it takes for a trend to exhaust. Even the past cycle is kind of right in about the same window. I mean, if we take our current cycle, it there we go. It's on the that is where I got this date a year ago. You know, this, we should be expecting, you know, this to be exhausted. Here's our trend. Here's the break of trend. And here's the top, you know. I mean, that is what is on this chart right here from June of last year. I mean, I think it's June 15th. Excuse me. You know, here's your downtrend. Here's the amount of time it took to break trend. This is when you should be expecting a top, and that's what we got. So, I mean, that's what's going on time-wise. What else is going on time-wise? Let's look at our oscillator. Here we can follow the curvature to the downside. We follow the curvature to the upside. Where should we be expecting a top? Right here. What do we got? We got nice heavy divergence. I mean, it's not clear, true divergence, you know, because we do have a lower high in the price and a lower high on here, but there's a pretty big significant difference there. Let's look at the money flow. The money flow is dipping to the downside also, but just time-wise, you know, this is about where we would expect this curve to culminate. And if we follow this up from right here where it built itself out to the upside, you know, we would be expecting this one to culminate about right there. You know, there's your oscillator. I mean, look at this right here. Builds itself to the downside, builds itself to the upside, and where's the top? You know, right in there. I apologize, I have a little bit of a chronic cough. Nothing major, but always a mild chronic cough. So that's time, you know, plus, you know, if we consider, you know, the bell curve idea, and we just take our simple curve here. Here's our curve, and let's follow the price action with that curve. You know, we should be expecting, you know, this here to be somewhere in this window of time here. We've already broken the momentum curve. So, I mean, time-wise, indicator-wise, trend time-wise, you know, we're kind of there. Momentum, we already took a look at that. I mean, the money flow, you can see the money flow is starting to curve to the downside. Let's go to the monthly ones. I mean, we're looking at the weekly, you know. I mean, that's high time frame. I mean, let's go out to the monthly. I mean, what do we see here on the oscillator? It, you know, we have, again, for the second time in a row, we have bearish divergence on our oscillator. Higher high, lower high. But look at our oscillator here. It's maxed out to the top side. And the only positive thing on this monthly oscillator I see is this VWAP's got a little bit of nice inverted curvature. You know, I would much rather see it curving the way that it is than curving the other direction. So I mean, this yellow line, I mean, it's got this curvature this way, like it's slowing down, you know, this guy right there, as opposed to it could be curved this way, like it's gaining speed. So that is good. Let's see, what else could we look at? I mean, what about just our regular straight up old Joe linear trends? You know, here's our initial trend, and I mean, I'm looking at the monthly. We'll pop back to the weekly here. But even the monthly oscillator is pretty maxed out, you know. I mean, we could put in a double top like we did here, you know, with the lower high on the oscillator. Well, we certainly could, and we got a higher high, swing failure on the price. Let's go back to our weekly here. So, you know, on the weekly, now we've put in a double top with a lower high, which is what I talked about in my last video, which has probably been about a month, you know. So we're in pause territory, we're in distribution, and hopefully reaccumulation. And if that's true, we're at the bottom of the range, you know. So here's our first major trend, and here is our secondary trend, which we have now broken, you know. So I mean, we've broken trend. I mean, the most local trend. We've put in a double top. We're at macro resistance here. We've broke back below it, you know. We've got money flow coming down. This VWAP's already down here a decent ways, you know, so maybe we come down just a little more and then we pop back up for a lower high. Now that we've put in the second high, we can almost kind of see the current rate of decay, which is very, very slight. You know, we'd be looking at something like this time wise. And let's take our oscillator here. Let's you know, it's about right there. These blue waves is nothing more than price averages, so I mean this curvature should match the curvature in your price action. This is just much smoother. It's just smoothed out. So we're at macro resistance. We've put in a double top. We hit a time cycle projected a year in advance. We've had 3 weeks to the downside. Our wave trend is giving us a good indication that we could be headed to the downside. So that is why my personal bias is there. We've broken trend. We've broken the momentum curve. I mean, what else could I look for? I mean, I just can't even think of anything else that I could even look for, you know. I mean, the only other thing that would be on that chart would be our Gann fan, you know. So if we take our Gann fan, and again, this is measuring momentum, you know. And the way that I use this is I find my low, and I line my 1-to-1 relationship up with my first, with my first high here, you know, the first time it comes in contact with price action. This is the 1-to-1 right there, you know. Here it's resistance, here it's resistance, here we broke through it, this one, and look at where we stopped, right on this one, you know. Let me get rid of this trend line here so you can see it a little better. So there's a little background sound. So, I mean, you can see here, I mean, I'm setting this here, you know, following the steepest price action. Here it's resistance. We broke through it, found support at the second one, broke above, found support on that same Gann line, and we rejected off of this one. So, I mean, my guess is maybe we hit this one and bounce through it and pull back to, you know, maybe this one right here. Or maybe we just bust right through this thing, reject off it, and come down here. If we start talking about levels, you know, we've talked about time, we've talked about momentum. You know, we should be expecting this downward move to be over, you know, somewhere in about this time period. And as we get closer, we can start to narrow that down. I mean, here I'm just coming up roughly about the middle of September. When I look at the curvature of this price action, I mean, that's kind of about what I see. We've only got these two guys right here. So, I mean, that is pretty much about the same thing there, time-wise. Another thing we could look at is we could pull out our Gann box. We're awfully extended, I think, for the Gann box, but Let's just start out right at the bottom. Let's only consider the time ticks. We're going to run it all the way to the first. Yeah, so here be let's consider this to be the first move in the macro trend. Here it exhausted and went flat and did what we could potentially be doing right here. We had distribution, reaccumulation, and another rip. Technically we kind of, even though we do have this and it exhausted, this here seems more like it's part of a much bigger thing here, But we hadn't broken trend in all this other business and these other pullbacks. So, my faith, we're far more extended up here than we're back here. We're twice as extended, for that matter. So, time-wise, this Gann box here, so what did it give us? Here is this first move ended, and then this is right where this move begins. So I put the 382 mark there, and here's our 50%. We got the, that's where this directional move ended. Here's the 618. It's where this directional move ended, and this is giving us, a potential reference period way out in December. If we split this in half, that's August 5th. Another way that we could use this, and all we're looking at here with this Gann box is we're just looking at proportional relationships to price action that exists already. So let's start at our high, and let's take our first pullback, our first directional move ended right at that 302 or 382. Our 618 is right at that, our 0.5 is right at that high. This is right at that high, and this is giving us July 22 for a potential pause. And I bet if we threw that Gann fan up, that would probably line up very nice with that price area. If we look at price levels, let's pull this down to where we want to adjust our Gann box. We want that 382 to be right at that first low. That's giving us a potential price level of 44,000, and then way down here at 25,000, which I'm not looking for, but what it's pointing out is this proportional relationship that exists. Here I've adjusted. Here's the top of the Gann box. This 382 is the bottom of this first pullback. Look at where the 0.5 is. It's support here. Look at where the 618 is this resistance level. Look at where the bottom of the Gann box comes out. Perfectly proportioned. And I could say it 15,000 times that things manifest over time in proportional relationships for whatever reason. I have no idea. So, time-wise, I would be expecting this here. Maybe we get a pullback and then a larger move, and that's what gets us out to this December mark. Our Gann box gives us December. Our oscillator and our curvature give us September, middle of September. So maybe that middle of September ends up being something like this. Maybe we get a curve to the downside, maybe it culminates, price comes up, here's our previous support, flips it into resistance, and comes on down, and gets us into a potential price level that we will look at, because what do we have on this chart here? We have some potential pullback areas. We'll let that load. So let's just check once our measured move. So if we started at this high, we came down this far, and why do measured moves work? It's proportional. Since they added this add texting, it makes it awfully hard to drag these things. There we go. So let's say that we came down to this level and we pulled back to the support resistance flip, our measured move would bring us to a price level of 35,000. You know, I mean, that to me, my window here is $32,000 to $42,000. I mean, any shorting I will be done with 90% of, probably by $43,000. You know, I mean, this is the move. But you know, maybe there's another move to be had right here. I mean, we'll see. But, you know, maybe that's, so, I mean, this measured move would get us out to about November, you know, and if you had a little sideways action and reaccumulated and ripped, that would kind of line up with that Gann box. We've looked at time, we've looked at momentum, we've looked at trends. The only thing that we haven't looked at really is price levels. We just barely touched it here with the Gann box. We got our Gann box price level. And we've got our our measured move level here. And then another thing we had was our average range, this monthly true range of 55%. We already talked about the size of that box, so let's just make one of those real quick. We'll just grab it right here. We'll just say this is our average range. You know, these are giving you ranges where you look for changes in structure in the price action that show you that something is changing. And would you imagine that? I mean, ooh, you know, proportional price action is the real deal. So, I mean, here is your average move here, you know. Even your move to the upside is pretty darn close there. And we already looked at it in the backside, all the other ones, just like on our model from a month ago. Here's our true range of about 55%, you know, which brings us down to 35,000. So we've got two things pointing us into the $35,000 area. One thing I want to throw back up there real quick is I just want to throw the Gann fan back on one more time. Let's just look at its relationship to what we got going on here already. You know, so I mean, see how this works out here. I mean, how smoothly. I mean, if this took even just a little bit longer, maybe we didn't come all the way here, we ranged sideways a little bit. You don't need to come right up to these lines, but here we're matching this 1-to-1 relationship. Here's a 2-to-1. You know, that's the same amount of time with a less change in price, you know, half as much. Here's 3-to-1, 4-to-1, 5-to-1. You know, it's losing momentum. People get more bullish and then they get less bullish. You know, so we've got a few things on there already. So here's our monthly true range bringing us down here. You can see our Gann fan is kind of fitting our idea of a potential measured move there, like a middle of September, you know, get a nice relief rally and possibly continue down for more downside. I mean, I don't know. How much does price need to come down to re-entice that interest? So, I mean, we've got these two significant levels right here. This is also our last support resistance flip, you know. You know, I mean, come down, retest it, and come up back up, retest this one, and maybe we come down lower, maybe we don't. Maybe we don't even come down here. Maybe we hold and just bounce. This is my bias, is to the downside, and we are playing out potential scenarios using all of our little tools and methods here. One thing that we haven't looked at is let's look at our retrace, and let's take the whole trend first. So we'll go from swing low to swing high. We want our numbers going down. We want to know how much of this trend has retraced. You know, is it 38.2%? Is it 50%? Is it 61.8%? How much of it has retraced? You know, so I mean, this is right above the 50% level, a 50% retrace. Well, duh, we have a 55%, but this is a 55% drop in value. This is a 55% retrace of this entire change in price. You know, here it went up this far. We're looking for it to give back half of those gains. So I mean, that's pretty significant. But the 50% retrace is very common, which is also our support level here. It's a resistance level here. So I am liking this $35,000 level as a very nice target level. Here is our macro support resistance flip right here, you know. Here was support. Here it's resistance. And we want to reclaim it as support. It hasn't even been really hardcore retested yet. You know, the only other thing that we haven't really looked at is we haven't looked at our octave method scale. So I mean, if you don't know the octave method, I mean, we're talking about what I consider to be one standard range or one standard deviation from an exhausted trend. So here I've got our fib retrace tool. If I go down to my templates here, I've made one where I've adjusted these values to all be 1/8 increments. You know, so here we got 0.125, 0.25, 0.375, 0.5. So these, now I've changed it so that this scale is in eighths. That's why it's called an octave scale. And what we're looking at is we want to look at the trend, and we want to find out what, you know, here is where this trend exhausted, right here. This was one deviation from exhaustion. Here's the first pullback. You know, here's the next, you know, how long did it take to meet sufficient resistance to reverse the trend? You know, that is one deviation, or you know, and I am applying a probability principle of a, you know, of deviations that you know, can usually make it about 5 deviations, maybe a maximum of 8. And we are awfully close. We're actually a little bit beyond that. So I mean, right here, you know, we're matching this with our first high. Here it's support. Here it's resistance. Here it's resistance, support, resistance, support. Here it's resistance, support. You know, pretty much the same thing. And then here now we're kind of flirting with the top of it. A lot of times you'll make it 5 deviations. You know, here we made it all 8. So now if we consider this level-wise to the downside, let's start at the top. Let's assume for argument's sake that this is the high. So now we want our octave scale, we want this first run to be whatever this low is. So let's just take, here, well, let's do this. Let's grab our magnet. We'll just be very accurate. Let's set the top one right there. Then the bottom one, we're going to grab our ray tool. Here's a horizontal ray. We're going to find that low and snap a line. So that low is 56,500. So we want this first run to be 56,500. And that will give us repeating. Oh, we can turn our magnet off. That'll give us, you know, repeating ranges of that size. So we want our first one there to be 56,500. Close enough. 56,510. You know, so now as we come down our scale, each of these lines should represent a significant, you know, support resistance area if price action is proportional. Look at where all these weekly candles closed, right on that line. Here's our resistance level. We're just ever so short of it. Here's support. I mean, right on the money. Support, right on the money. I mean, see how proportional these ranges are, and that's because there is institutions and people trading these repeating things that they can find, you know. So it's like, I mean, there's, once you reach a certain point, people just aren't comfortable holding it because, you know, there is a tendency to reverse. Like, just take just this range of price action right there. You know, it's your, there's your range, you know. Works. How far do things tend to deviate? Well, usually about 5 deviations tends to be the max, you know. Your average pullback, you know, maybe be like 1 or 2. So here's 1, 2, 3, 4, 5. Be way down there. So if we go here, let's go halfway in between here. Let's say that we make it 2 deviations, but we only make it halfway down through this one, but we don't make it the full way. So I mean, our $35,000 level that we were looking at is you know, about right there, and our other level was right in here somewhere. You know, maybe we'll make it all the way down to that 250. We'll throw our Gann fan back on there and just kind of look at those momentum angles. That being price action is proportional is why, I mean, these rates of change are very consistent, is why things like this fan, or I mean, what I often draw myself is what I just call speed lines, is because it is proportional. So let's see, if we consider right here, that is August 5th. We were looking at the middle of September, so let's just take September 15th. That's about, you know, about halfway through there. You know, that's about 49.5, you know. Maybe we make it a half a range down, come back up and retest it, and then make it the rest of the way. Come up like quarter of the way or something, come on down. And I don't know, we'll just have to see. I mean, so my personal, I mean, ideal situation for a directional move to the downside in all seriousness would be to follow this curve down to about right here. Come on up and let's continue this curve. Come on down to that $35,000 area. Accumulate. And hopefully continue on to the upside. And, you know, I'm just kind of noticing now you would also have your retail enticement pattern. You know, your reverse head and shoulders. So, I mean, that is what I got. You know, if you like this kind of content, hit the like button, share, subscribe. I just showed you about 50 ways to analyze price action that is based on solid concepts that if you come into our TradingView Degen-Dynasty ideas page where I post these charts, you know, I mean, kind of a lot of them have kind of worked out exactly that way, you know. If we look at some of these older ones, I mean, this is the same stuff that I've looked to make all of these, I'm not going to say calls, they're highly potential projections, you know. I mean, look at where we're at, you know. I mean, it's just a reality. You know, if we look at INJ, I mean, we're looking at the same principles. You know, we're trying to target when we should expect directional moves, what direction we should expect that directional move to be going, and what kind of levels and time periods along the way should we be looking for. And then when you get into those time reference periods, well, that is when you are looking at the local price action. So that is what I got for you. If you want this chart here, you'll have to come into our Discord where I have it posted. It is private on TradingView from a month ago. It's a free Discord I participate in because teaching these things and helping other people helps keep them fresh in my own mind, helps teach me ways to articulate them better and understand them better. So, by me being a help to you, you are being a help to me. And if you like this content, hey, like, share, subscribe, come on over to that free Discord. But until next time, trade well.